What is going on, everybody? Welcome back to yet another brand new YouTube video. Now, in today's YouTube video, we'll be going through the ICT silver bullet model. I'll be sharing with you guys the full criteria of this model from A to Z. And also, I'll be sharing with you guys my trade that I took this week in order to clarify the model as well. So without further ado, let's get right into the video. Now, the first thing that I do before even looking for a trade in the New York session is actually marking up all the liquidity levels in the previous sessions. My apologies for interrupting the video here, guys. However, I am opening up a few more spots for my one-on-one Crown Capital mentorship program, where you guys could come in and literally work with me one-on-one, and we'll get you to that next level in your trading, whether that getting your first ever funded account, first ever payout, or even being consistent in the markets. Now, if you guys do want to be like my boys David and KO right here, where they came into the mentorship absolutely fresh in trading and literally getting their first ever payout within a month of working with me, which is absolutely insane. The link will be in the description down below if you guys do want to apply. And if you guys do apply and get accepted, we'll talk very shortly. Now, let's get right back into the video. Now, why is this very important? This is very important because when we open at 9:30, market opens at 9:30, we're going to be looking for a sweep of either a buy side or a sell side liquidity. And that is when we're actually going to be looking for a trade to enter. So having said that, we always want to be marking up all the previous session highs and lows. Now, as you can see right here, all the previous session liquidity has been marked, such as Asia highs and London highs and London lows. And same as on S&P 500, Asia highs, London highs, and London lows. Now, as you can see very well, market opens at 9:30, and we actually come down and sweep London lows. As well as that, if we look very closely to the left of us on NQ here, we swept a couple more sell-side liquidity levels. Now, having said that, I'm definitely going to be looking to go long because price tends to move from liquidity to liquidity. So if we sweep a sell-side liquidity level, price is going to be wanting to seek some sort of buy-side liquidity, and vice versa. If we sweep a buy-side liquidity level, price is going to be wanting to seek some sort of sell-side. Now, dropping down from the 15-minute time frame, which was used for marking up all the previous session liquidities, down to the 1-minute time frame where we actually execute our trade and look for our entry. Now, as we can see, this red line right here is the sell-side liquidity level that I mentioned on the 15-minute time frame, which is the 25,569 sell-side liquidity level. Now, just to mention, a valid trade could be valid if only NQ or only ES sweeps a sell-side or a buy-side liquidity level. Both assets do not have to sweep a level of liquidity. If one sweeps, we could still go ahead and actually execute the trade on NQ, as that's the asset that we always are going to be trading. Now, here is where we're going to be introducing the trade criteria, and this trade criteria must be met every single time before taking a trade. If one of these steps do not appear, we cannot take and execute the trade. So as we mentioned, the first step that we need to be looking for is a sweep of liquidity. We got that sell-side liquidity level swept. Now, the second thing that I want to be looking for is a swing high to be created. And the reason why I want to be looking for a swing high to be created is because step number 3 and step number 4 are actually correlated and are related to that swing high being created. Something that I also do want to add on is that both assets must be correlating. And what I mean by that is both assets should be showing the same price action. So whatever happens on NQ must happen on S&P 500 in the trade criteria. If that does not happen, then there is a low probability the chance will actually play out in our favor. Now, having said that, we do get the swing high on NQ right here at 10.03 after obviously sweeping this sell-side liquidity level. Now, if we look to the right-hand side, we also do get this swing high at 10.03 also on S&P 500. So far, so good. We are correlating and the criteria is showing itself. Now, number 3 and 4 on our checklist criteria is going to be the market structure shift and displacement. So what that pretty much is, see this candle right here at 10.05 and this swing high at 10.03. So this 10.05 candle breaks and closes above this swing high right here. So if we draw a line horizontally, we'll see that price actually comes up and breaks and closes above this swing high right here. That is just called a market structure shift and a displacement to the upside. A displacement is pretty much a big impulsive move to the desired direction, which is in this case the upside, which indicates to me that price is willing to seek key higher levels. Now, if we look to the right-hand side, we also get the exact same thing happening, where we get the swing high at 10.03 getting broken and displaced through by the 10.05 candle. So this is also called a market structure shift and a displacement on S&P 500. So far, again, so good, since both assets are correlating. Now, coming into the step number 5, now this step is fair value gap to be created, and I want to see that fair value gap because a retracement into that fair value gap is going to be our entry. Now, this step right here, I do not have to see both assets create and actually doing the same thing. Now, in this scenario, we do get the fair value gap on NQ and ES, but some other scenarios, we do not have to get S&P 500 to create a fair value gap. only on NQ, as that is the asset we will be taking a trade on. So here is the fair value gap on NQ that is created at 10:05, and also a fair value gap on ES, again created at 10:05. Now here comes the fun part, step number 6. As soon as price retraces into that fair value gap, as we can see right here at 10:07, we go long. We execute the trade going long right here. Now, as soon as price retraces onto the edge of the fair value gap, we execute. We don't wait for price to come all the way to the middle or the bottom of the fair value gap, since sometimes price only taps into the fair value gap and goes into the desired direction. So make sure to have your limit order as soon as price retraces into that fair value gap. Now, regarding our stop loss, we always want to be putting our stop loss below the nearest swing low to the left of us. And in that case, it's going to be this one right here at 10 o'clock exactly. Now, coming into the targets, we always want to be targeting the lowest hanging fruit. And what I mean by that is we don't want to be targeting the external buy side liquidity levels. We actually want to be targeting the minor buy side liquidity levels, such as the first swing highs that we see to the left of us, or the first buy side or minor buy side liquidity to the left of us. As we can see in this example right here, we have this first swing high right here at 90 handles. At around 9.54, we get the first take profit. Now, if you want to leave a runner or two, you could also target this swing high right here for 108 handles. Now, don't get too greedy and target the most opposing liquidity, which is this external buy side liquidity level, because as we can see, price did not actually go and take this out. So targeting the lowest hanging fruit and getting these small wins to add up, that is the main key, and that is actually the key to profitability. Now, something that I do want to mention to you guys is the time that we took this trade in. It's actually inside of the first AM macro. Now, the New York AM session has two macros, the first one being from 9:45 all the way to 10:15, and the second one being from 10:45 all the way to 11:15. Now, these two 30-minute intervals have a high chance of price making a run to key levels. So make sure to execute your trades only in those two 30-minute intervals and nowhere else. Now, our trade was executed in the first AM macro from 9:45 all the way to 10:15. Now, you don't have to get out of the trade in the first or second AM macro, but make sure to always be inside of the trade and execute within the first or second AM macro. Now, coming into managing the risk whilst you're in this trade. So as we can see right here, we did create another swing high right at 10:09, and with this 10:11 candle, we actually broke this high. So as soon as we see that, we're going to be reducing our risk all the way to the nearest swing low after we've entered the position, which is going to be at 10:07. And as we can see, price delivers ever so perfectly after a couple of minutes anyways. So reducing risk is always a good idea. Price, if it's trending to the upside, it wants to make higher highs and higher lows. So there is no reason for price to come and actually sweep this swing low and then pull up higher. And there you have it, guys, the ICT silver bullet model right in front of you guys. If you guys have any questions, let me know in the comments down below, and I'll be sure to get to them within the next 24 hours or less. Now, before you guys go anywhere, we are actually on our way to 1,000 subscribers. So if you guys could do me a massive favor and hit that subscribe button, that would be great and amazing. I also do offer a VIP trading Discord, a full-on VIP experience where you guys could come in and literally take the exact same trades I take on a regular basis, like these, banging around 108 handles on a day, which is absolutely insane. There is heaps of terminology, and my full strategy is actually written in there. There's a whole traders chat for you guys to come in and chat with like-minded traders like yourself. The link will be in the description for that. Also, I do offer a Telegram channel where I do mini trade recaps for you guys to come in and just get a better understanding of the model itself. I love and appreciate each and every one of you guys, and until the next time, peace.